All right. We'd like to thank the old panel, Ateha and Barbara, for taking the last session. So we've been talking about capital markets, and we are going to talk about pensions, which we believe do support the capital markets quite a lot, especially in the African setting. Now, here to discuss what I believe is going to be exciting session that will cover the leading pension schemes in Africa. They're going to discuss the strategies that are involved in investing in Africa and where they see the opportunities. Some of the opportunities have been talked about within the capital markets. Some of the risks obviously involved in doing that. And as a result of the risks, the rewards that can be there. So on the left, extreme left, I will try and mention their names, but if I err, just forgive me. Lesidi, yes. Makofaha, I think. Mwakofi. All right, that's easy. She's the acting CEO of the Botswana Public Officers Pension Fund. Next to her is Damola Sengule, Sonagule? Shogule, okay. Who is the CEO of Stanbic IBTC, Pension Managers Limited, from Nigeria. And right next to me is Chinelo. She's the Director General of the National Pensions Commission, or the regulator for the pensions in Nigeria. So join me in welcoming the three distinguished guests who are going to discuss this topic. So we would like to start off with Chinelo, and I'd like you to set off the scene, obviously from the regulatory side, but Nigeria is definitely a powerhouse within the continent in terms of resources and capital markets. So how are you working with the pension scheme and the industries to take advantage of the capital market opportunities in Nigeria, but also to support the investments in the West African region as a whole?
Thank you very much, and I'm glad to be here. I'm here as the Director General acting in the National Pension Commission. And I'd like to tell you a little bit about the National Pension Commission before we go straight into the question. This is a commission set up by law in 2004, and it is to regulate and administer all pension matters in Nigeria. And the Pension Reform Act 2004 was enacted to solve the huge pension problem in Nigeria. At the time, we had a 2 trillion deficit in pension fund liabilities, and that deficit was growing by the day. And following the enactment of the law, what it saw was the introduction of the contributory pension system to stem the growth of that liability, and also to introduce a sort of shared ownership of the pension fund issues. And that, since 2004, has seen the emergence of 20, well, then it was 25, but there's been mergers and acquisitions. So we have 20 pension fund administrators and 5 custodians. And what it is that it is a contributory system where every individual who is working and who has 5 employees or more required by law to open a retirement savings account where they contribute a certain percentage of their salary into those accounts. And this is administered by the pension fund administrators, and these funds are held by the custodians, and there's a huge separation of duty. And that's the way we have done for the past 8 years, really, because the law was passed in 2004, but it didn't actually start till 2005. And right now we have 3.6 trillion naira, I think that's about $22 billion in assets, and these are growing. And it's thanks to this contributory system. And more pertinent to what we're doing today is how we have, how these funds are going to take advantage of these capital market opportunities. It's something that we're already doing. The funds, we have one of our leading PFAs right next to me. We are already investing in the capital markets in Nigeria, but the opportunity is yet untapped. And with the possibility that these pension funds are not static, we're also working into making sure that the tenets of the pension fund regulation, which is safety of the funds, is incorporated with the need to actually invest these funds. And to that end, we have regulations to guard the pension fund assets. And typically, we are focusing now on Nigeria, because part of what we're wondering is whether we're going into the West African angle. The law as it is allows investment outside the shores of Nigeria, whether in Africa or the rest of the world. But in the regulations we have, it is a time thing. At what point do we move outside Nigeria? We are interested in setting up the Nigerian investment for starters and making sure that the funds are primarily invested in Nigeria. And then, obviously, there will be need for diversification, and then we'll take it from there. But like I said, everything is ordered step by step, and so that at each point in time, we're setting that not only is Nigeria benefiting from the pension funds investment, but also that the pension funds are safe. Thank you.
Well, thank you so much for setting the ball. The key items I had in there is safety of the funds, having regulations, and then doing it step by step, but allowing for investment outside of Nigeria. So it's only natural that we'll go to a practitioner within the Nigerian market, a fund manager. And my question to you is, as the leading pensions fund player, give us your perspective on engaging global institutional investors within the African context.
Okay. Thank you very much. The way we look at it is the fact that in our engagement process, we've always tried as much as possible, right, to position some of the things that we see in terms of the, let's say, the potentials that we are seeing in Africa and also particularly in Nigeria. And the way we look at it, on one side, we look at it on the basis of, let's say, the impressive growth rate that we've seen in Africa and also in Nigeria at the beginning of this program. We heard about, let's say, the growth rate that we've seen, in Africa. Let's say in 2012, we're talking about something close to about 4.8% for Africa. 2013, IMF is estimating that we will have about 5.1. By 2014, we are talking about something close to 6%. So in Africa, right, the growth rate is impressive, and we see that, and we are also trying to key into that. So every time we have engagement with institutional investors from outside the country, outside Africa, we let them know what we are seeing, and you can compare that and contrast that with what you see maybe in terms of U.S. economy, in terms of what you see, let's say, in Eurozone, that is even predicted to contract. So that's number one. Number two, we also look at what we call the benefits, from increased, foreign direct investment in Africa. Let's say in the last 2 to 3 years, right, we've been seeing increased volume of foreign direct investment, and whereby for Africa, it's moved, in 2012 by about 5%. It's only one of the 2 regions in the world, that actually experienced an increase in FDI, and that's impressive. And to the extent that we are seeing that, right, we are also, as asset managers, we are also trying to key into that in terms of trying to invest in Africa and also in Nigeria. Then thirdly, we are looking at, let's say, the demographic dividends and rising urbanization. And what do I mean by the demographic dividends? 70% of Africans are below the age of 35, right? And when you look at that, the middle class is also rising. And we've seen a middle class that is as huge as, let's say, that you can compare, let's say, to the population of Brazil or that of Russia. So when we see that, we say that, look, these are opportunities that we need to tap into. And it's being predicted that, let's say by 2015, about 220 million Africans who are just barely able to, let's say, afford basic needs. By 2015, they will become consumers, right? In terms of urbanization, cities with more than 1 million population, we've got almost close to about 52 cities in Africa now with population of more than 1 million, right? That is very close to what you've got in Europe, right? It's more than what you've got in North America. So when you look at, in terms of urbanization, what are the things that will flow from there? Whether it's housing needs, whether it's consumer goods, we are positioning and we are trying to tap into that. And we are also telling, global institutional investors that these are opportunities that we need to jointly, explore. Political environment is becoming more stable. Our Ghanaian counterparts have already told us what happened, in Ghana. More African countries are becoming, democratic in terms of what they do. And the other thing is the fact that I have my regulator here, the regulatory environment is becoming more and more bankable. Bankable to the extent that you can predict, bankable to the extent that you can put, you can put a lens on, how the regulators, will fashion out, regulatory environment that will be conducive to investment. And we've been seeing supportive government initiatives, and they are coming, every point in time. Another thing is the fact that we have attractive returns, right? And in Nigeria, last year, the all-share index, that captures the Nigeria Stock Exchange, we are talking about something in excess of 30%. This year alone, year to date, we've done something close to about 28%. And we are talking about dollar terms. So when we see that, look, we want to partner those who are trying to come in to take advantage of this. And we also look at what you call the increased domestic savings. And for us, it's very, very key, right? Chinelo had mentioned the fact that, before the Pension Reform Act in Nigeria was put in place, we were talking about pension liabilities of about 2-point-something trillion naira, right? But now it's moved from negative of 2, we are talking about 3.6 trillion naira. So we've moved from negative to about 22 billion US dollars. That's a massive domestic, kind of savings when you look at it from the point of view of Nigeria. So when we meet investors, when we meet global investors, we are saying, look, we've got this amount of money, right, that we want to invest. So you tell us some of the things you are looking at. We will tell you some of the things we are looking at, and we'll put our money where our mouth is. Because when we see those opportunities, we are not only just telling you, we are also trying to explore those opportunities. And where are the opportunities? Somebody was asking me earlier today. And we are saying that on one side, we've got, in terms of asset allocation, we've got about 25% that we can put in listed equities. 25% of our AUM. Our asset under management as a pension industry now is about 22 billion US dollars. 25% will give us, let's say, about 5 billion US dollars. The important thing is that we have not fully deployed that 25%. Where we are now is about 16. And it speaks about, being able to get more products in. We are hoping we'll get more of those products in. The size of the Nigerian Stock Exchange now is about 78, let's say 75 billion US dollars. And what we are trying to do is that the more we get more products, listed on the exchange, the more we will be able to deploy, what we've got. We are also exploring, and it's very important, for global institutional investors. We are exploring what we call the non-traditional asset. And because we are trying to match our own asset with our liabilities. So when it comes to real estate, some of the opportunities I've told you. When it comes to REIT, real estate investment trust. When it comes to infrastructure fund. When it comes to private equity fund. When it comes to infrastructure bonds. Those are the assets that we are also trying to explore. Because they on one side, they will fit into the kind of liabilities that we've got. As I've told you, if you look at the current contributors to our scheme, about 65% of them are below the age of 40. Right, you become pensionable in Nigeria at the age of 50. And most people will still work until they are 60, 65. So if you have about let's say, 65% of the contributors below the age of 40, it means that the liabilities will crystallize 15, 20 years from now. So what we're trying to do is to make sure we match our asset with our liabilities. So that's number one. That's why we want to play in some of those long, term, kind of asset classes. The other reason is that because, we are still developing, right? And we have many deficits when it comes to infrastructure, right, in Nigeria. We believe that if we play in infrastructure space, right, whether it's power, whether it's transport, if we play in those areas, it's also to our own benefit. Why? Because as we speak now in Nigeria, we're talking about unemployment rate that is above 25% out of a working population of about 70 million. The more people we are able to put on employment, right, we will see more contributors to our pension scheme. Then we will get more assets. So it's also in our own interest. That is why we look at some of those asset classes. On one side, we match our asset with our liabilities. On the other side, we are able to invest in areas that will generate employment so that we can get more contributors and we can get more assets under management. And because at the end of the day, our fees are linked to AUM. So that's why every time we meet, let's say with the likes of those who can put some of these products in the market, whether we are talking about Macquarie, what Macquarie is trying to do in infrastructure space, we say, look, you guys, we cannot wait. Actis, you guys, we cannot wait. We need to move. And it's important for us to be able to do that as soon as possible. Luckily for us, about 2 infrastructure funds were approved by SEC, about a month ago. And we are hoping that before the end of this year, right, commitment will have been given so that we can be able to tap into what is happening in the power sector now. It's being privatized, right? And in the energy sector, it's being privatized. So we can invest in that. And that will be the beginning of the journey into investment in infrastructure. I would like to stop at this point.
Thank you so much, Demola, for putting a little bit of detail on that. The I word I was waiting for, and it did eventually turn up, the infrastructure. I think that's a big story for Africa. The fact that the non-traditional asset classes, that as we know them, are beginning to take shape. The laws are beginning to come in place for things like REITs, and therefore what I always call the elephant in the room, whereby we do not have enough to invest in as pension schemes. We're beginning to get some alternative asset classes that can help us move the continent forward. And therefore, to sort of wrap up the discussion on the pensions, I'd now like to ask Lesidi, whose pension scheme is recognized as one of the pioneers of promoting pension fund investments across Africa. It has allocated almost 14%, which is the highest on the continent, of investments across Africa. So if you could just tell us a little bit about your strategy and how your recommendations are working with making sure that the other pension funds can also follow suit.
Okay. Maybe before I get to selling my company, I need to sell my country. Yes, because otherwise I will lose my job when I get back home. Botswana is a very, very democratic country. The GDP is quite strong from the investment perspective. We export the best diamonds in the whole globe. Yes, in terms of exports. And we have got the best tourist areas compared to the rest of Africa. Yes, it is, no. And in terms of security, it's a very nice country because there is no crime. Everything is a very peaceful country. And politically, it's a democratic and we have a very stable political system. Now, coming to the question for my chair here, Botswana Public Officers Pension Fund is the second largest in Africa. We've got 49 billion worth of assets. And this, in terms of the investment shredding of these investments, is that 60% of these investments are invested offshore and 40% local. We've got 6 asset managers, we've got 1 asset consultant, and we are regulated, and we've got custodians. But in terms of reforms, like the chair has actually said, is that we've got a very great history in terms of how we have invested the money. We started with 2.1 billion up to the 49 billion over the 12 years that we have been in existence. We currently had an alternative investment strategy which was launched over the 2 years. And we pride ourselves in the sense that we set ourselves international benchmarks. If you can just go into our website, you will be able to see those benchmarks that we set ourselves in terms of across the asset classes that we have. I'm very excited today because this is the milestone in the history of the fund, in the sense that every 3 years we launch or we review our investment strategy. But this time around, being an acting CEO, I need to position myself for the position, and obviously for doing that, with your support, obviously. I'm launching a new investment policy statement, which has been approved by the actuary. It has gone to our regulator for review, and it has passed the test of time, which is exciting from our perspective. We have also done a new investment structure, and in terms of the asset mix, the information is available on the website. And next week, when I get back home, we are now rolling out this investment policy statement. What does this mean to the institutional investor? Is that we look out to our website. We are going to issue a public tender for the local assets, the 40%. Like I said, the six asset managers will be competing. Obviously, we are extending our horizon so that if maybe we could identify other potential asset managers out there, they are welcome to come work with the BPOPF. For the offshore, it will be selective because obviously we don't even know where to go globally, but it will be selective. But in terms of the tender itself, the tender will be available on the website. So this is how we do things. The institutional investor like yourselves, in terms of working with the BPOPF, because this is a time that the tender will be coming out by end of next week, is that we gauge ourselves in terms of the returns, where we say the return should be greater by inflation plus 5%. So that is what we gauge ourselves against. But we are a DC fund where really, as an institutional investor, you should bring out the returns that are sufficient to meet our members' needs. And I think I will stop here.
Well, thank you so much. Well, you had it here first. The tender is out next week. If you're looking to manage almost $50 billion, you can do that by looking at the website next week. And you should be able to then give them a good return, but it will have to be inflation plus 5. What's the inflation rate in Botswana?
It's 8%.
So 8 plus 5, so 13 is the benchmark. So we've heard from all our panelists this morning on the pensions. According to the time, we've almost run out, but how many questions will you allow us? Let's have as many as one there.
Good morning. My name is Donna Sims Wilson, and I'm with Castle Oak Securities, an African-American-owned investment banking firm with 8 offices nationally, and I've been working on the continent for 20 years. And so I'm very interested in 2 things as it relates to the public pension plans. I work with U.S. pension plans who have had a significant impact on our economy, and I'm wondering, 1, what is your current asset allocation for each of the pension funds in Nigeria and Botswana? And then 2, how are your pension funds working with commodities and perhaps even commodity futures to impact food security across the continent? Thank you.
Let's take more than 3, or at least 3, and then we'll come back to the panels. So there's another hand up there.
I'm Mark Dinner from Bridgewater Associates. And you spoke a little bit about this, but I was curious how you think about balancing just getting the best risk-adjusted returns for your pensioners and matching liabilities versus building domestic capital markets in your countries and also in Africa.
Sorry, I didn't catch it. I don't know about. Sorry, just repeat it.
Basically, I wanted to understand a bit better your goal, how much your goal is to just match liabilities and get the best return for your pensioners, and how you balance that with building capital markets and investing locally to stimulate the economy.
Okay, so it's basically how do we balance between the liabilities and the assets, and how do we stimulate the economies? So just both of you. Any more questions? Oh, there's one more there, and then we'll come back to the panelists.
Hi, thank you. My name's Ashley Bendel. I previously led Renaissance Capital's Africa business here in the US, and I'm starting my next thing shortly. And my question's to the panel in Nigeria with regards to your limitations with regards to investing in other asset classes. With regards to your limitation towards the stock market, I understand it's currently capped at 25%. Will that increase in the future? And how will your real estate and alternatives be impacted as well?
Okay, so will your other asset classes increase beyond what you've got at the moment, and what are your expectations? So if we could just take those 3, the first one was on asset allocations, the second one was on commodities, and the last 2 you had. So if you just quickly both give it a shot as a regulator.
Okay, I'll just start with the last gentleman, and I think Demola can take care of the lady. With regards to the asset allocation, we have framework for regulations and investment that we roll out periodically. As we speak now, we have a bill before the National Assembly for the amendment of the Pension Reform Act 2004. We're seeking for a total repeal. And one of the key things in that amendment we're seeking is to sort of open up the investment window. Because what we have in the law as presently is quite restrictive, especially to new asset classes that are emerging. And we see that a lot of opportunities. I was listening to my regulator, the SEC DG, and she was talking about MTNs and the telcos that are not listed on the Nigerian Stock Exchange. And the truth is, with the law as is now, even if they were, probably the pension funds will not be allowed to go into them because of the restrictive nature of 5 years and all sorts of payments of dividends and that. Having said that, when this comes through, the asset classes as they are not static. They always are the allocation is dependent on what we have observed in the market. What we do is to have a level playing field in the law, and thereafter, everything will be subject to review in regulations and depending on what is going on in the market. You cannot see, the PFAs and report daily to the Commission on their investment activities. And we in-house have to check that and make sure that every limit is not exceeded, or if it is there a reason why? Is it something we need to? We are running a very consultative industry, and what we do is not just with operators, we also talk with other regulators and the Nigerian investing and even international investing public, so that at each point in time, the regulations we roll out capture the need in the country at the time. I think that's one thing I needed to say. And Demola, you can take on the asset allocation.
Okay, thank you. The asset allocation is actually on the website of PENCOM. But the important thing is that, I mean, in terms of summary, we can do 5% of AUM maximum in infrastructure fund, right? We can do 5% of the AUM also in private equity fund. When it comes to infrastructure bonds are part and parcel of corporate bonds. We can go as high as 35% of the AUM, right? And but as we speak now, we've not been able to gain as much traction, let's say in terms of what we've done in infrastructure bonds, infrastructure funds, and private equity funds, because those products are yet to be fully in the market. The way we are looking at it is that before the end of this year, we will have been able to do something substantial, because some of those private equity GPs, the managers, they've been approved. The funds have also been approved, so that the PFAs, the pension fund administrators, will be able to do something there. So that's number one. Number two, there was a question pertaining to commodities and food security. On commodities, I think we've got one ETF, listed on Nigeria Stock Exchange that is linked to gold as a commodity. Right, the way it is, is there. We can do that if we want. But when you try to link it back to, let's say, food security, we'll be looking at something that is indirect. Indirect to the extent that in Nigeria now we are talking about transformation agenda in the agric sector. We are talking about moving agric from just, something that you do at a subsistence level, just for the sake of development, to something that you look at as a business, right? And that's one of the reasons why we are talking about even substitution of 20% of wheat flour in bread, with cassava flour. And that goes down right, developing a whole value chain, right, for cassava as a product. The same thing is happening to rice. The same thing is happening to some of the other producers. And the important thing is that when you look at also some of the facilities, whether you are talking about storage facilities, to the extent that the companies that are meant, to invest in those areas, they are listed, right? I don't want to mention names of companies now, but to the extent that they are listed, we are interested. Because don't forget, we have self-interest. Any of those activities will generate employment. The more Nigerians employed, the more asset I have. As we speak now, we have only about 5.3 million Nigerians under this scheme. The penetration ratio is less than 7% of the working population. 5.3 million out of a working population of about 70 million is just too low. Within 8-9 years, we will have gone much more than that. But the limitation had to do with two things. Number one is the fact that we have high unemployment rate, right, within that working population. Number two is the fact that we have high informal sector, right? We are talking about informal sector. We're talking about some micro, macro enterprises, about 40 million already recognized, employing an average of 3 Nigerians. So if you look at it 3 times 40, right, 14 million micro enterprises, it gives you something close to about 42. So the important thing is that if we are able to deal the informal sector and bring those ones into the formal system through the financial inclusion programs of the central bank, then we will have more subscribers to this scheme. And those are some of the areas where we are trying to address, the issue of food security and the issue of commodities. I think I will stop here. I mean, we still have some other questions.
Well, I know we are running short of time, so I'd like Lesida to just make a comment on the asset allocation and, if anything, on the commodities.
Okay. I think in terms of the mix, it's in our website. Locally, we are looking at equities, bonds, property, and Botswana alternatives. International, we are looking at emerging market equities, international property, and alternatives. I would not like to comment on commodities at this stage.
Okay. All right. So I'd like to bring this discussion to an end. I believe that we can see the opportunities within Africa. Certainly they were there. Some of the risks were talked about, but more specifically, some of the rewards that you expect to get. And I hope that because the regulation is consultative, to use the regulator's words, I think that it's all under control. So thank you so much.
So,
Doing business in Africa, you can't afford to be without Africa Investor.